I'm delighted to be here and join you in this symposium. Annual conferences, I know, are a bit of a marathon, and I know that from the schedule, some of you started this morning at about 7 o'clock in the morning, and I'm here to talk about insurance, which can be a rather difficult subject for many of you to like. It has, I think, the same level of popularity as maybe a spinal tap or a root canal therapy. So I'm really delighted to see so many of you here, that you have the stamina and the fortitude to attend the session at all, and I certainly understand why all of you are looking so serious. So all of you, I say courage. I'm the last obstacle between you and the bar at the Marriott. I'm going to start by talking about automobile insurance and not professional liability insurance, and I have a reason, of course, for doing that. I think automobile cover is one that you know the most about, and it's also unique in that every single policy condition, every term, every exclusion, every definition is regulated by the Insurance Superintendent of Ontario. It's a statutory policy. You can have up to, I would think, probably 2 or 3 dozen endorsements on an automobile policy, but all of the policies and the endorsements are, at the end of the day, going to be exactly the same. So when it comes to buying a policy, you know what you've got. You know if you go to another company and you have the same wording, that it's apples with apples with apples. And all that's left is for you to think about who's going to provide you with the coverage at the most competitive premium. Well, I'm here to tell you that professional liability insurance is not like that. There's no such thing as a standard wording, and the policy conditions and terms, exclusions and definitions can be all over the place. So when you take your buyer's experience from an automobile policy and bring it to professional liability, I suggest that you're making a mistake. You're not going to be comparing apples with apples, and you need to really focus on differences of coverage. I'm going to make 3 assumptions. I have been making 3 assumptions in giving this talk. My first assumption is that you all know, right down to the last penny, exactly how much you're paying for professional liability insurance. I'm also going to say that only a few of you have any understanding of what you actually bought with the premium. Third, I think it's true probably that most of you don't have too much idea excuse me, of what you ought to have bought. So we've got actually a lot of work to do, rather more work to do, I think, than we can do this afternoon. And I want to take a minute just to describe what the OAO has been doing to help you to come to grips with this subject. On the website this week, there is a memorandum, an advice memorandum, which gives you about a 9 or 10 page description of the coverage in the policy for 2014. It's a master policy, as you know. All of you get certificates which are drawn under the master policy, but very few of you have actually seen it. We haven't put the master policy on the website yet, because at the moment it's over 82 pages long, and it has some of the most user-hostile language in it that I've ever seen. And rather than inflict that on you, we've asked the insurance company to come up with a manuscript wording, which is going to be for the OAO alone, which is going to be shorter and more user-friendly and written in language that all of you are going to be able to understand. So in the meanwhile, you have this advice memorandum to give you guidance on what the coverage is in fact all about. Where's Bethany? Bethany? Change the slide? Oh, we've hopped one. So let me start by looking at the policy bit by bit, and I think you're going to find this rather more interesting than you might think. Let me start by reading a typical insuring agreement. It says, "We will not settle any action without your written consent." Whoops, I'm sorry, Bethany, go back 2, would you please? We've jumped several slides. Okay, now move on to the next one. There we go. Yeah, now this particular insuring agreement is taken from a state farm policy. It's not untypical of the wordings that are out there. It says, we will pay those sums that the insured becomes legally obligated to pay as damages because of bodily injury caused by wrongful acts in connection with the practice of optometry. We have the right and the duty to defend the insured by counsel of our choice against any suit or action seeking those damages. We may at our discretion investigate any occurrence or offense and settle any claim or suit with or without the insured's consent for any reason and at any time. And somewhere in the policy there's a condition that you must cooperate with us in the investigation or settlement of the claim or defense against the action. So what's wrong with that? Most of the time, probably nothing, because your interests and those of the insurance company most of the time are going to be exactly the same. They're going to hire the best of legal counsel, they're going to defend in your name, they're going to do a good job in all respects, except that sometimes you're going to have a case where your interests and the insurance company's interests are going to diverge. The insurance company is interested in settling the claim for the lowest possible cost. You can understand that. They don't want to go on and on. They want to find a way of settling it and settling it inexpensively. You're interested in exoneration. Your concern is with your license, with your livelihood, with your professional reputation. If these people can go off and settle claims in your name without your consent, and if it leads to a disciplinary problem or settling a claim where you're convinced that you were not at fault, I think that's a problem. Next slide, Bethany. So the better arrangement is we will not settle any action without your written consent, which consent you will not withhold unreasonably. If you refuse consent unreasonably, our duty to defend ends, and you must then defend against such action independently and at your own expense. Our liability will then be limited to the amount of damages for which the claim could have been settled if our recommendation had been consented to, and for all defense costs incurred up to the time of your refusal. Well, that's not the greatest change, but it's a lot better than the first one. And this is, in fact, the agreement which is in the OAO master policy, so that if you and the insurance company part company on how the case is going to be defended, you have the option of taking it over yourself. The insurance company still has to contribute the amount that the claim was on reserve at the time you refused consent, and contribute that to you at the time that the thing is finally settled. It's a big difference. If I were a professional, I wouldn't want the insurance company to settle without my consent. Next slide. The policies that you have are all written on the occurrence dynamic. I'm not going to go into the difference between occurrence and claims made. It's on occurrence because the college requires it to be on occurrence. And that's fine with me because an occurrence policy or a claims made policy is perfectly okay, provided that it's properly endorsed and properly written. The big thing to remember about this is that the bodily injury that occurs during the policy period may be discovered months or even years after the policy has expired. The policy in force when the injury occurred must nonetheless respond to the claim. So we have somebody who was misdiagnosed 2 or 3 years ago, and the claim has now freshly been discovered. The policy that was in effect at the time that the misdiagnosis occurred, even though it may have expired, is still the policy that's going to respond to the claim. I'm going to stop for a minute and take a bit of a sidebar and talk about a very dramatic event which will illustrate what occurrence is in fact all about. In the late 40s, 50s, and 60s, there was mounting evidence that asbestos was a bad product. And by 1960s, the claims had become quite evident, and the courts were asked to decide on the question of liability. The thing about asbestosis or mesothelioma is that the lung receives the asbestos fiber and has its first insult, and then 30 years later, 40 years later, 50 years later, you have a case of mesothelioma. It takes years and years of incubation for the mesothelioma to become evident. So the courts in the United States, when this burst open, were asked which policy should respond to the mesothelioma. All the corporations who were being sued had bought insurance over years, and they wanted to know which policy should respond. And the courts replied on what is now called the triple trigger theory. The policy that was in effect at the time you swallowed the fiber should respond. The policy that was in effect when you discovered your mesothelioma should respond. And all the policies in between should also respond because the injury was continuous all through those years. And all the limits of all the policies you ever bought should apply to these claims cumulatively. So that if you bought $2 or $3 or $4 million or $5 million of limits over 30 years, you had $150 million of limit to bring to the settlement of the case. This hit the insurance industry at the time like a bombshell. They'd never considered that that was in fact the effect of an occurrence policy. Something like $100 billion was created in claims reserves in the course of a year at a time when the capital and surplus of the entire insurance industry, casualty insurance industry in North America, was about $150 billion. 2/3 of its capital and surplus was suddenly hostage to this particular event. Well, I'm not suggesting for 1 minute that optometrists are exactly in that league. I'm just trying to show you the dynamic of what occurrence can mean, and also to show you that your own latency, and I'm not an optometrist, so you have to fill in these blanks for me, you could have cases where you misdiagnose or mistreat a patient. It has latency. It occurred when you misdiagnosed. It occurred because you had continuous treatment of this lady, all due the subsequent period of, say, 18 months or so. And finally, you have the policy in effect when this is actually discovered. And all three policies potentially can be at risk. Next slide, Bethany. Or they might be if it weren't for this clause. This clause says, this policy is excess of any other insurance that insures against the same event. When this policy is excess, we will have no duty to defend any claim or suit that any other insurer has a duty to defend. Well, that's pretty dangerous stuff. It means that if you have one of these situations of continuous injury over time, and if you have more than one insurance company, let's say you changed insurers from 1 year to another, then none of them are going to investigate and defend, and it's as though you had no insurance at all. So obviously that needs to be fixed, and we don't want a policy that reads like that. Next slide, Bethany. So the revised policy wording, and this is in the OAO wording, is that this insurance is primary and our obligations hereunder are not affected by the existence of other primary insurance covering the same claim event. And the second thing, in order to manage this well, is do try to stay with the same insurance company, all things being equal, for as long as possible. If you have the same insurance company over a period of many years, then there can't be any conflict with other insurance. They're the ones that have to respond no matter what. Next slide, Bethany. We need to talk about who is insured under your policy. First, there's you, the practitioner. That's obvious. Then, if applicable, there's your professional corporation, because your professional corporation is a legal entity and it could be named in a suit. And then there's your commercial entity, if you have one, your eyewear store. An aggressive plaintiff's lawyer can name all three of you as joint and several defendants in a suit for damages, so you want to make sure that all three of them are named as insured in your PLI policy so that it can defend all three interests and pay damages on their behalf. And in the case of the OAO policy, there is no charge for adding these interests to the wording. It's free, and it's necessary that you have them there. One of your technicians might also be named, and providing that they're working for you and they're under your direction, they're also covered under your policy. But there are two special situations I want you to think about. An OD who's an associate in your practice and acting perhaps as a partner is not covered under your policy, and he or she needs to have their own policy, and of course the college requires each of you as an OD to have a policy as part of your licensing requirements. And then we have an optician. Opticians are special. I've been learning a little more about optometry and opticians. Whether they're licensed or unlicensed, they can be an employee, and under the Registered Health Professions Act, you can delegate opticians, you can delegate not prescriptions, but dispensing to an unlicensed technician, provided that you're sure that they're competent to do the work and that the patient's security and safety is not at risk. Or an optician could be an independent contractor, in which case they need to be licensed and they need to be in possession of their own professional liability insurance. And from a risk management perspective, keep in mind that if you employ an unlicensed optician under your direction, you become the personal guarantor of his or her professional competence. And if a court hears an injury case that has been caused by the egregious incompetence of an unlicensed optician, you're open to punitive damages that can be a multiple of compensatory damages. So in my opinion, best risk management practice requires you to always hire licensed and insured opticians under an independent contractor agreement. I realize that's a somewhat controversial thing, or has been, but I also understand the college, as of April the 15th, now makes it possible for you to hire licensed opticians under independent contractor agreement. There's one other issue, however, in relationship to all of this. You, your professional corporation, and your practice need to make sure that you're insured if you're named in an action that arises from the errors or omissions of your independent contractors, whether they're optometrists or opticians. Their professional liability covers them, but it doesn't cover you. And as we have been saying, your practice policy only protects you from the consequences of your errors and omissions and those of your employees. In its typical form, it won't insure you for the contingent liability that you may bear in consequence of the mistakes that may be made by your independent contractors. And very few policies pick up on this question. So that if you have a joint and several suit where you're named as a result of the independent contractor's negligence, you would have no coverage, but under the OAA policy you do. You need to make sure that your practice policy is modified and it extends to protect you, and it's called vicarious liability extension. Next one, Bethany. So you've jumped again, Bethany. Can we go back? Yes, here we go. So let's suppose in this case we have Dr. Jones, who is the independent associate who has his own professional liability insurance. He's with insurance company A. Sunset Optical, which is the name of the practice, has professional liability with insurer B. Miss Jenkins is a technician and has her liability under the professional coverage of Sunset Optical, and all three of them are jointly named in suit. Who's going to take the lead in defending the claim, insurer A or insurer B? This is going to be a matter of discussion between insurer A and insurer B. I would hope that they will pool the limits under both the independent and the practice policies and work cooperatively to defend the case. It's always possible that Dr. Jones says, well, to heck with that. I think you're going to throw me under the bus. And I'd rather, thank you very much, have my own policy defend in my name, and I don't want to get involved with a joint defense. That's always possible. So be aware of those kinds of conflicts. There's not very much we can do except after the fact, where we try to get everybody to collaborate and cooperate with one another. Next slide, Bethany. Typically, in a policy, State Farm and others, they say bodily injury means bodily injury, sickness or disease sustained by a person, including death resulting from these at any time. That's what the bodily injury that we're protecting you against means. Well, fine, but it doesn't cover patient confidentiality relating to allegations of humiliation, loss of employment, or financial loss. So that won't do, it's defective. Broaden the description of bodily injury to include coverage of liability arising from humiliation or as a result of oral or written publication of material that violates a patient's right of privacy. It's an important additional provision. Bethany? Another point, professional services means those services performed for others that are usual and customary to the practice of optometry. That's not very good. We all live at a time when practices are being modified and expanded, where things like family health teams and medical directives, and there's all kinds of ways and all kinds of pressures on optometry to expand its scope and make it more encompassing. And the college from time to time, I'm sure, will broaden the scope of practice. And when they do, we want the policy to immediately expand its coverage in parallel. So the better definition is to say professional services means those services performed for others that are in alignment with the scope of practice as promulgated by the College of Optometrists. And now we can be sure that as the changes come along, the policy will automatically respond. Bethany? This is a dangerous exclusion that I've seen in several policies. This policy does not apply to any claim while your license to practice your profession is under suspension or has been revoked, restricted, surrendered, or otherwise terminated, or while you are on probation. Well, let's suppose the college audits your record keeping one day and says, well, that's not good enough, and we're going to have to bring you under supervision for a while to make sure that you keep the records in the way that we prescribe. Does that mean that the college has just canceled your professional liability insurance? They didn't mean to stop you from practicing optometry, but now you haven't got any coverage and you're required to have coverage in order to practice. This is a pretty dumb exclusion. So the better one is eliminate the words restricted and while you're on probation. We can certainly all understand why the insurance would not apply if your license has been revoked or suspended. Bethany? I think you've been pretty good. I know that insurance is not your most favorite subject. Hopefully this has been a bit more interesting. But let me wrap it up at this point, and so that we have lots of time for questions and answers. I hope I've at least given you some evidence that all insurance policies are not the same when it comes to professional liability. They are not, and the differences can hurt you. Read the policy, which is a challenge. You fortify yourself with a good stiff drink and read the darn thing from front to back and from back to front. Get familiar with it. It's not that painful. All of you have had to study far more complex material in the course of becoming optometrists. And when the manuscript policy is delivered and on the website, you're going to find it much easier to read, and I promise you it won't be longer than 25 pages in length. Don't keep chopping around from one insurance company to another. Don't be driven by price. $50 is neither here nor there. Your premiums are enormously affordable. In the United States, an obstetrician or a gynecologist is paying $75,000, $80,000 a year for limits of maybe $500,000 if he's lucky. In desperation, a lot of them go bare. they put their assets in their wives' or their partner's name, which seems to me to be taking an even greater risk than going bare. So don't change insurers unless you have to. Your premiums are very affordable, and don't be driven to change from point A to point B by $100 worth of difference, especially if you run the risk of having some of these clauses creep into the wording, at which point you won't be as covered as well as you ought to be. All things being equal, work towards a position in which your practice OD principals, the subcontracted ODs, the corporate practice entity are all insured with the same insurer to reduce conflicts of the kind that we've been talking about. And I've already done number 5. Don't automatically choose the cheapest. Don't assume that the most expensive is best. Do be driven by the important differences of coverage and not by the price. And you'll understand more about these differences as time goes by as a result of the new material we're putting on the website. And I hope that in due course we can keep up a steady stream of additional communication with you so that you all become experts on this subject in a matter of about 6 to 12 months. Okay, questions and answers. Yep. The previous policy had some significant defects. On the other hand, it's fairly representative of what's out there. We really are talking in the OAO's case now of a best-in-class wording, which is not easy to find. It's way out in front. And the wording that Cornerstone was giving us was pretty standard. And because it was standard, it had a lot of these defects that we're talking about. There are some mics around if any of you want to use them.
One of the options was an optional internet insurance premium.
Cyber liability, yes.
What's that?
Cyber liability is written in 3 different sections. It's to protect you for your liability if private information is tapped by somebody hacking your system, or if your data is corrupted, or it has to do with public relations, of restoring your system, and everything associated with leaks of patient confidentiality and your liability as a result of hacking into the system. It's a brand new coverage. It's only just hit the insurance market within the last year or so, chiefly because of the publicity that was given to Target and others where personal information has been used to advantage people who are trying to steal people's identity. And that is the relative scope of that particular coverage. Yes, sir?
I wasn't clear at the beginning there where you had an example of if there was a dispute between the optometrist and the insurance company that you would settle it in a reasonable fashion. Who decides what's reasonable?
If necessary, it would have to go to arbitration, but the main point that I made in that particular example is that you've now got a point of negotiation with the insurer that you didn't have before. It's perfectly reasonable that you would be worried about your license being suspended or your livelihood or your reputation being damaged because the company decides to settle in a case where you feel they ought to continue to defend you. But if they don't agree, then you may have to go to arbitration and have it settled that way. Yes, sir.
Can you tell me how much the premium has changed since therapeutics have been introduced in our practice?
I'm not aware that it's changed, but again, I haven't been involved with optometrists long enough to really know, and I also have a great problem in getting a definitive historical transcript of the kinds of losses that optometrists have been producing in Ontario and why. And I'm extremely anxious to get that transcript so that I can get a better feeling for where these claims come from and how much they cost to settle. Generally speaking, your claims are infrequent. You all do a pretty good job in practice management from that point of view. But the few that you do have can be fairly serious. The biggest that I'm aware of was for about $600,000. There are a number at $100,000, which isn't too horrendous, but it's certainly not trivial. Whether that frequency changed when the circumstances you refer to came about, I don't know. Another thing I'd love to do, and to encourage the OAO if it's able, is to take an initiative with all the other associations across Canada. I'd love to see us establish a national data bank which records all optometry claims and incidents year to year, so that all of us can get a better feeling for what it was in each case that produced the claim in order to better inform our practice management across the country. One of these days, perhaps we'll get there. Yes? No? You're entitled under the Registered Health Professionals Act to delegate any act you choose to an employee. Whether the optician is licensed or unlicensed, if you want him covered under your practice, he is. He's deemed as an employee. But I think it's better from a risk management point of view to ask the optician to buy his own PLI if he is licensed. It's going to cost him less than $100 a year to do that for limits of $3 million.
The claims that you mentioned, are those cases that were settled or were...
On reserve, no, those cases are settled. There are a number of others that are still outstanding, I believe, but again, my information on that is not as good as I would like. And it's a priority with me to try to dig into the record and find out exactly what the claims experience has looked like. I don't know at this point. Not accurately enough.
Ron, can you speak a little bit about how claims made against optometrists affect premiums going forward, how our claims history affects us?
Absolutely.
As well as how any claim that's made has to be defended and how that defense will affect our premiums going forward.
Absolutely. Well, first of all, let me try a conventional definition of insurance, which is the certain and absolute loss of a small, affordable amount of money, which is the premium, in exchange for protection against an uncertain and unaffordable loss. And you do not expect, when you buy automobile, if you buy your home insurance, if your house burns to the ground, when you put up a new one, the insurance company is not going to charge you more because your house burned to the ground. That's why you bought the insurance. But when it comes to a group purchase, the insurance company expects that the sum of the premium is going to contain the sum of the losses from year to year. You're no longer transferring risk when you're in a group. You're actually financing claims, which isn't quite the same thing. And most people are only going to join a group to pay less. You don't join groups in order to pay more. You might join a group because you need superior cover, and I think the OAO is demonstrating to you how important that can be, but you don't normally join a group because you want to pay more. You only want to do it because you're going to pay less. And in a group, the premiums are going to rise and fall in direct relationship to the losses that you ask the underwriter to pay. So if your group is a superior group, your premiums are going to be superior, and if your group is not a superior group, it's going to go the other way. At the moment, your premiums are around about the $550 mark, fundamentally, which is pretty good. And it reflects, frankly, favorable experience. You've done well. But if your experience deteriorates, the premiums will go up. No question about that. What was the other part of your question?
About how you have to defend any
Absolutely. There's been a case that somebody was talking to me about just before I came into the room, where a lady brought a frivolous claim, something to do with cataract, and that because she alleged that because the diagnosis had been missed in the 3 years since she had her vision had become very bad, she was now suing because it was impaired, and it was a frivolous claim. But it still cost over $60,000 to defend it. You're open to frivolous claims, and your reputation and your pocketbook has to be defended. And it can be extremely expensive. Lawyers today, a good lawyer, $700, $800 an hour, just preparing for trial costs a fortune. A 3-day trial, $50,000, $60,000 with special witnesses. So you're always vulnerable to suits that have no merit at all, but which still have to be defended. Any others? Yeah.
The insurer not go after the frivolous claimant and get that money back?
No, not usually, because very often the people who bring the frivolous claims don't have any money to begin with. There's no point in going after somebody who has nothing to give you.
With the last insurance company that we were dealing with, I was involved in setting up something where you're looking at areas where optometrists got into trouble, and we were trying to identify them and perhaps using best practices how to avoid them and communicating that to everybody through the association and our newsletters. I wonder if your company will do the same, kind of, see what moving forward, what cases start to rise, and then perhaps form a committee to sort of try to address those through newsletters to our group.
I think the idea is extremely worthwhile, but I wouldn't have the courage to consult with an optometrist about how he ought to run his practice. I'm not an optometrist. So this has to come, I think, from optometrists themselves.
You would be able to identify some of the lawsuits that are coming forward.
That,
You would be able to all learn from that, how to avoid things like that.
that comes back to the point I was making, that I would love to have an accurate loss transcript of where the losses have come from and what caused them. We have to be very careful, though, because the information in some of those claims files is extremely sensitive, and we wouldn't want to identify the particular optometrist in question, so it all has to be desensitized. There are also some other areas of loss prevention and loss avoidance where I think we can be helpful in such matters as independent contract language, contractual language as to who's responsible for what when you employ an OD associate, and things of that sort. I think we may be able to come up with something that's helpful. Any others? Okay, well, if that's it,